Hi traders, this is Dale Pinkert at Forex Stop Hunter on Twitter. A lot of people call me Coach. The Fed met today. We had the beige book from the Fed, showed a little bit of confusion, hesitation, so I want to talk about rates. Rates have been declining. I provided the 10-year yield chart. They've declined from 325 to 255 recently, moving sideways. It's my contention that yields could rise here back towards this 290, 285, 290 level, and that may put some pressure on the market as well as some commodity markets as well. Crude had another update, remain steadfast that there is a correction coming there. So in this 10-year yield, I'd be looking for 285, 290, and then I think the possibility for 2% rates do remain viable. The next chart I'd like to share with you was the gold market. We did achieve the levels that I talked about, the 1340 level, even got above it a bit. And after that occurred, we did have a bit of a correction after the Fed. So the first cracks in the armor for a potential correction to the downside are beginning. There is still the possibility of marginal new highs as the RSI was pretty blown up over 80, but the warning of not mirroring the gold at this time and that there could be some type of shakeout in the gold market. You have a lot of euphoria from the gold bugs now, and I'm not saying that we're not going to 1400, but I do believe that markets will shake out as many participants as possible before the move they're looking for happens, and most likely without them. So people that are late to the party in gold, we've already rallied from 1160 to 1345. So you're talking about $185 advance, and now people are waking up to it. So taking a look at the gold, you could see that we attained those objectives, and I would be cautious in the gold here, actually looking for shorting opportunities in the gold. And I'd like to wrap it up with US dollar yen, which has been a risk off, risk on currency for quite some time and has a lot to do with dollar direction. I still believe that the dollar has some more downside left in it and will be reflected in the yen. I included a fairly short term chart in the yen. You could see we peaked a little bit above 111 and have been trying to recover in the last several trading days. It's my contention that there could be some risk off. And if that occurs, the possibility for 109.50, maybe even a 108 and a half handle is viable in the coming days and weeks. I would definitely consider a tight risk trade and would not want to be short this market with closes back above last week's highs. Remember, don't just count your pips, count your blessings. If you're looking for a trading coach, you could find me in the Eagle's Nest. Good hunting, everyone.